Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Friday the 30th of the 4th 2021. Time is 0500 GMT, Asian session coming to a close, European session firing up, our lunchtime North American session. Right, yesterday then, Thursday the 29th, we had a negative unopposed driver in the yen, so no backdoor flows. We also had a joint rock and mover, so the bulk of the positive flows were going into the pound at plus 77 and equally into the dollar and the euro at plus 22 and plus 22, and the yen was the minus 121, activity plus or minus 121. Right then, so intra-week then, this is most relevant, so it's from Monday, start of the week 26 to about 15 minutes ago. We've got a negative opposed driver in the yen at minus 413, front and back door flows mainly going into the pound at plus 299, into the euro at plus 129, and the dollar was the negative rock at minus 15, activity plus or minus 428. So over this week we've had the yen weakness driving, pound strength, euro strength, and a bit of static dollar, minus 15, although it may not have felt like that. Right, intraday then. So this is the Asian session to about 15 minutes ago. We've got a positive unopposed driver in the yen this time, plus 47, no backdoor flows. The opposing negative flows coming mainly out of the euro, minus 31, out of the dollar, minus 12, and the pound was the negative rock at minus 4, activity plus or minus 47. What's been knocking this about, or going to, Thursday then, which was last night, we had positive New Zealand consumer confidence data, which is tier 2. Friday then we had the so far the 30th we've had China non-manufacturing manufacturing PMIs. The manufacturing PMIs on the official side were negative. There's a private version which gives them as positive, which is tier 2, and the non-manufacturing PMIs were positive. Right, so we've got German GDP and Eurozone CPI today, and just to let you know that from tomorrow, which is Saturday the 1st, to Wednesday the 5th, Japanese and Chinese markets will be closed due to a holiday. Right, so let's see what's been happening in the flows and get rid of this. Our trades are around about 500 to 600 points in the red still. They improved quite a bit yesterday, and they're messing about now. We're just grinding through it at the moment. We'll talk about that later maybe. Right, so let's we've got look at the actual flows. We've got euro weakness across the board, we've got yen strength across the board, we've got pound weakness except against the euro, the dollar and the Swiss. We've got the Swiss weakness except against the euro. We've got CAD strength except against the yen and the AUD. We've got the AUD is strong across the board. The NZD is strong except against the AUD, the yen and the CAD, and the dollar is weak except against the Swiss and the euro. Right, so what have we got there? We've got euro weakness across the board, yen strength across the board, and we've also got AUD strength across the board. Right, and take your pick somewhere in the middle. Right, so let's have a look at the asset classes. Just get rid of this. We'll start with the US dollar index. US dollar index. Right, basically the US dollar index broke and then it's been come down. It's about 0.37 from the modelled floor. Okay, so it's pretty weak. Gold had this double top, sold off, it came back, it sold off, and it's now operating at that point there, which is the sell-off support, and it's what is it? It's 0.4 from the floor. Nobody's really buying into gold, even off the dollar weakness. So oil, where are we? Oil's come up a bit. It's quite a bit actually. It's 1.8 from the high. So oil's come back. Wall Street. Let's have a look at Wall Street. Wall Street broke. It's now flatlining. The S&P double top broke, flatlining, similar. Tech took an age to break and is now back to that resistance point. US 10-year and the bond. Well, the US 10-year price has come back down a little bit, so yields have gone up. It's 0.28 from the floor. The bond, likewise, but this is the price has come back more on the bond, 1.4 from the floor. So you can see that prices in the bonds have been dropping, yields have been rising. So basically, we're getting this situation, and the euro, arguably, the euro yields have been rising faster than the US, and that will obviously have a bearing on the euro dollar. Right, right. Copper. We had a change of contract yesterday. So you got 1, 2, 3, 4, 5 pumps. It came back to the second pump. It went back to base camp. It's broken and it's just come off a little bit. So it's well above the previous resistance. US steel, it was sold off at the double top, it broke and it's come back below that double top and it's now 0.4 from the high. So steel is still struggling a little bit. Right, so let's just finish off what we're for the week then, really what we're talking about. We've had a fairly interesting week. We've had the Fed and various other stuff. Right, so basically we've got this holiday next week coming into Asia. It's likely you're going to see possibly you might see something come off equities today. You might do, but that's possible. And if you do, you're going to get like a sort of a risk-off effect. Right, we're still short dollar against the euro, the pound, and the AUD, and we're short NZD against the euro, the pound, the CAD, and the AUD. The NZD is being locked really through large players' option interests, which will have to wash out. So that's where we are. We're sticking with our current positions. Just bear in mind, as I said, there may well be some unusual moves because of the Asian holiday next week. So we'll see anyway. So tomorrow we've got the weekly review, the data cycle review, and Monday we're starting again on the daily briefing. So thank you very much.